folks? Welcome to the Day Trading Swing Trading Market Wrap for July 17th, 2007. What we're going to first do is discuss a couple technical chart patterns in the market today that were very interesting to say the least. And since we haven't had a video for a couple days, I just want to summarize what went on over the last couple days. What we saw late last week was a huge rally, alright? And this caught the shorts off guard like crazy. And what do I mean by that? Well, if you guys remember correctly, what you saw is on Thursday, a huge move up in the market. Dow was up almost 300 points. Now, what happened? Well, there were a ton of shorts because the technicals and other things were just setting up for what people thought were going to be a big fall. And this is precisely the setup that causes rallies. And I'll tell you why. Because whenever there's too many shorts in a market, the market cannot go down. And the same goes for too many longs. Alright, this is just the way it is. Alright, when too many people, this is the contrarian view, and all of you guys listening to this should really look into what contrarian means and understand how it comes to pass. Alright, folks? So, when you have too many shorts in the market, which is what it was last week, they had to squeeze the shorts and get some of those shorts to cover. And what happened? Well, they started to rally the markets, they pushed it up harder and harder. Eventually, some shorts said, I got to cover. That causes more buying pressure, and up the market goes. And it causes more and more buying pressure because more and more shorts get squeezed and have to cover. So in essence, what you have is, by some big money players pushing the market up, you have continual domino effect buying. And it just pushes the market up to astronomical levels. And that's where we are now, folks. Let's be honest. Between the housing crash, between interest rates over 5% again, between oil near $75 a barrel, between the war in Iraq, between all the money being spent on so many different things, to have a market that keeps on rallying like this, all it can be said is that it's the big money pushing the little money out of the way and just causing a catastrophic move up like we've never seen before in the markets. The only thing you can liken this to, folks, and this is scary, is to the time right before the Depression, right before the 1929 crash in the stock market. Alright? But it is what it is, and you cannot fight the trend, and the trend is up. Now, let's look at today's chart. This is the intraday ES, the S&P September contract, and this is the best for looking at how the market moved today. And what you can see is, at 6 in the morning, we started to trend up. We trended up pretty nicely. Then we sold off around midday, rallied again, and then sold off into the close. Alright, now what's so significant about this chart pattern? This is a classic M pattern, folks. It doesn't get any clearer than this. This is an M pattern to a T. Alright, look at this. Up, down. You guys can all see the M, I'm sure. Alright, it's not a stretch here to say it's an M pattern. Now, what was so interesting here is that right before the close, starting at around 3 o'clock, we really started to see a sell in the futures here, the S&P future contract, September contract. And this continued all the way to the close right here, where we closed the contract. Then Intel and Yahoo came out with earnings right after the bell, which were not as good as people were hoping for, and we spiked down. Alright, and this completes the M move. Now, what to expect? What you're going to have is usually either a little more of a drop, but what I think we're going to see here, folks, is a double bottom. Alright, you see over here is a double bottom area. Alright, and that's going to cause a little bounce up, which causes the A pattern to form, and the A is continued by another drop down, making a new low. So keep in mind that we're setting up for an MA pattern, which is a classic pattern in technical analysis. We've already created the M here. It's just a matter of, are we done making the M on the downside and we're going to bounce up first? Or do we continue to make a lower M here and then bounce up here and then sell off hard? Either way, this chart pattern says that we should sell off hard. Alright, we'll see. We will see, folks. We all know the big money's in charge here, and if they want to rally the markets, they will. Alright, let's take a quick look at Intel and Apple right here. Here's a level 2. Alright, check it out. Intel closed at 26.33 and is trading down a dollar at 25.35 by 38. You can see prints going off here at 25.38. So we're down about a dollar on Intel after the bell. Let's look at Yahoo. Alright, Yahoo again closed at 27.53 and right now it's trading at 26.58 by 59, so down a dollar. Alright, so you're getting a sense here, folks. This market has ballooned to the point that meeting expectations doesn't cut it. Alright, Yahoo and Intel met expectations. But that's not what the market needs anymore. Now we're so at the point where we need exemplary earnings. We need outlooks of revenue that's going to be increasing this much and so forth. So keep in mind, we could be at a little turning point here, and we'll have to see how earnings for Google come in on Thursday to really get a gauge of the internet sector overall. Alright, folks, and as you can see down here, this is now futures at 519 right here. All right, we are down another 4 points on the futures after hours here, so we could be setting up for a little drop tomorrow. But again, keep in mind, guys, when I say this, when the futures are down, too many amateur shorts get short, and then what happens when too many people are short? Have we just gone over? The market pushes up, okay? So that's key to remember, guys, all right? Yes, this is negative news, but do they want to push the shorts out before they let it drop? And what would coincide with that, folks? An AM pattern and an A pattern. So a push-up would squeeze the shorts out, get people thinking we're going to go up, and then the A would continue by dropping down and going lower. All right, so that's the outlook from the technical side of the chart here. All right, folks, overall, decent day trading day. And as we were saying, a decent day trading day here, folks, and you can see the P&L here. And if you guys can't see it that well on YouTube, go to InTheMoneyStocks.com trading videos, and you will be able to look at it. It's posted, it's snapshot right on there. All right, you can see up about $800 today and change. We did a lot of small little trades today. It was really a kind of a blah day for the most part, but it adds up. Listen, it adds up any way you cut it, and $800 for the day is not too bad. We're still holding blue as our swing trade. It's just kind of making a nice bottom down here. Until we get some news on that stock, it's really, we don't think it's going to move too drastically. All right, what we're really looking for is a will.i.am debut of their gene line that they're doing with Black Eyed Peas, will.i.am, and see if that European deal they struck in March can bring in some solid revenue from Europe for their jeans. All right, their antique denim jeans are the big seller over there. All right, folks, and I do like the will.i.am packs because they're catering to their market. They understand who's buying the $100 plus jeans here, folks. And let's be honest with it. It's not, 50-year-old people. It's not people who have careers. This is kids who will associate with will.i.am from the Black Eyed Peas as R&B, somewhat in that culture. And that's why it's a great idea to have signed him as a spokesman to help them develop their gene line. All right, folks. So that just gives you a little background. All right, let's talk a little bit about a couple of these trades. What did we see today? Well, we saw a couple different decent plays today. The ESMC was quite a mover. I want you all to see this. Look at this spike up from basically 550 and change all the way up in one 10-minute candle all the way to almost $8. All right, we scalped it for a little quick buck, and you guys see in the chart we made 280, but that was from later in the day. Right down here, I don't have it in my chart, but this is the 50 moving average. All right, I had this on the other chart I was day trading off of, and this little wick touched the 50 average, and when you know a stock rolls over like this, and it comes down to touch that average, you have to pick up a little position. So we picked up a small, tiny position here, got the bounce up about 20 seconds, and literally 20 cents in about 20 seconds, and we were out. All right, for a quick $120 extra gain. So between the two of those, and that was, again, right before the close, we took that position. And right there was a very nice little couple trades in that stock today, all right? ZView was another one. This we had been noticing all day was kind of building momentum right over here. And the key here is just to pick it up as volume comes in, and you can see the volume down here coming in. We had a nice chunk of shares there, and we sold it for a nice gain there too for about $305. Everything else we did was just kind of like, a small scalp, $85, which, listen, it's not shabby. I mean, those add up, and as you see, it did today. But overall, it was a decent day trading day. Nothing spectacular. I really like to make some scores of about 400 to 500 in one stock, but that just wasn't available today. And the key here, guys, is when it's not available, you can't force it. All right. So when you can't force trades, that's when you lose, guys. When you force trades, that's when you lose. You sit back. Wait for them to come to you. Wait for the perfect chart setups. And again, we go over this in the day trading chat room. That's when things will work out for the best and you'll make money. All right. So again, just before I close down here, we want to take a look at those futures again. Let's see what they're trading at. Down 5 points now. So we see a very strong spike down here in the futures after hours. Now the question is, do we rally it? Do we make that A formation and then drop, or do we go lower first? And right now we're going lower first, but I do think we will spike up. Again, we're down 5 1/4 now on the S&P contract, September contract. All right, folks. And I just want to talk a little bit more about the day trading chat room. I invite you all to come and join. It's only $199.95 a month. There's no reason why in one day that shouldn't be covered by your profit. All right. Day trading is a very tough game. There's no doubt about it. Not everyone's suited for it. Not everyone will make money in it. But in the day trading chat room, we are there to help you and help you learn and help you try. All right, folks. Hope to see you in the chat room. Visit InTheMoneyStocks.com to sign up. It's under Day Trading Intraday Stock Chat. And have a wonderful evening, and we'll talk to you guys tomorrow. Take care.